Picture this: a world where your favorite gadgets suddenly cost twice as much, where farmers struggle to sell their crops, and where global trade routes are redrawn overnight. Sound like science fiction? Think again. This is the reality of the US-China trade war, and its effects are reshaping our economy in ways we're only beginning to understand. Welcome to the Economy Unpacked Daily YouTube channel. From Wall Street to your street, we share the world of money in a clear way. Today, we're diving deep into the US-China trade war and its long-term impact on global supply chains. It's a complex issue that's been brewing for years, but don't worry, we're here to break it down for you. Let's start with how we got here. Back in 2018, the United States decided to take a stand against what it saw as unfair trade practices by China. The weapon of choice? Tariffs. The U.S. slapped hefty taxes on hundreds of billions of dollars worth of Chinese goods. The goal was twofold: reduce the trade deficit and push back against alleged technology theft and industrial subsidies. But China wasn't about to take this lying down. They hit back with their own tariffs, targeting U.S. imports, especially agricultural products like soybeans and pork. What followed was a dizzying dance of escalating tensions, failed negotiations, and even non-tariff measures like investment restrictions and technology bans. Just when we thought things couldn't get more complicated, along came COVID-19. The pandemic, coupled with geopolitical issues surrounding Hong Kong and Taiwan, turned what was initially an economic dispute into a full-blown strategic rivalry between the world's two largest economies. Now, you might be wondering, who's feeling the heat from all this? The impact has been far-reaching, but some industries have been hit harder than others. Let's break it down. First up, the tech sector. Our smartphones, computers, and other gadgets. Many rely heavily on components manufactured in China. The trade war has thrown a wrench in this well-oiled machine, leading to higher costs and supply chain headaches. Next, the automotive industry. Car manufacturers are facing a double whammy of rising production costs due to tariffs and shortages of crucial parts. It's a bumpy road ahead for this sector. But perhaps the most dramatic impact has been on U.S. agriculture. American farmers, who once saw China as their largest export market, are now struggling to find buyers for their soybeans and pork. It's a stark reminder of how global trade disputes can hit close to home. And let's not forget about everyday consumer goods. From the clothes on your back to the appliances in your kitchen, many products have seen price hikes due to higher import costs. It's a change that's hitting consumers right in the wallet. So, what are companies doing to adapt to this new reality? Diversification. And many businesses are looking beyond China to spread their risk and avoid tariffs. Vietnam, India, and Mexico have emerged as popular alternatives for manufacturing. There's also a growing trend called friendshoring, shifting production to politically friendly countries to reduce geopolitical risk. It's like choosing your trade partners based on who you'd want to grab a coffee with. Some companies are taking it a step further by investing in domestic manufacturing. The idea of Made in America is making a comeback, with factories popping up across the U.S., Canada, and Mexico under the USMCA agreement. But it's not just about where things are made, it's also about how they're remade. Interautomation and nearshoring. Automation is reducing dependence on cheap offshore labor, speeding up production, and lowering long-term costs. Meanwhile, nearshoring, bringing production closer to consumer markets, is shortening delivery times and reducing shipping risks. Imagine a future where your new phone is assembled by robots in a factory just a few hundred miles from your home, instead of being shipped across the ocean. That's the direction we're heading, and it's a game changer for supply chain security and flexibility. So, what does all this mean for the future? Buckle up, because the next decade could be a wild ride. Economically, we might be looking at structurally higher product prices in the long term. That fancy new gadget you've been eyeing, it might stay pricey for a while. This could lead to increased inflationary pressures in major importing countries. But it's not all doom and gloom. Countries stepping up to replace China in manufacturing could see significant growth opportunities. It's like a global game of musical chairs, with nations vying for a seat at the table of economic prosperity. On the political front, don't expect U.S.-China relations to warm up anytime soon. The tension is likely to extend beyond trade into areas like technology and security. We might see new trade alliances forming. Think of it as countries picking teams for a very high-stakes game of economic dodgeball. There's even talk of a bloc-based global trade system, where the Americas, Europe, and Asia each have their own decoupled supply chains. It's a far cry from the interconnected global economy we've grown accustomed to. As we wrap up, let's take a moment to reflect on what this all means for you. Whether you're a business owner, an investor, or just someone trying to make sense of the economic news, understanding these trends is crucial. The U.S.-China trade war isn't just a headline. It's a force that's reshaping our economic landscape in profound ways. So, the next time you're shopping for a new smartphone or wondering why certain products seem more expensive, remember, you're witnessing the ripple effects of a global economic shift. It's a complex world out there, but armed with knowledge, you're better equipped to navigate it. That's all for today on Economy Unpacked Daily. Remember, whether it's Wall Street or your street, we're here to help you make sense of the money matters that affect your life. Thanks for watching, and we'll see you in our next video.